80% of the world's rare earth refining happens in one country, and it's not slowing down. While politicians argue about critical minerals independence, the smart traders are making quiet, strategic moves that lock in supply at prices the public market never sees. We're talking about neodymium, praseodymium, dysprosium, and other rare earth elements that make modern life work, powering EV motors, defense guidance systems, wind turbines, smartphones, and satellites. Without them, production lines stop, defense projects stall, and billions of dollars of investments sit idle. Now, here's the catch. In 2025, even if you mine rare earths in the US, Australia, or Africa, odds are high that material will pass through Chinese refineries before it ever reaches a buyer. Why? Because China built the refining capacity decades ago. They invested in separation technology, undercut environmental compliance costs, and locked in global dependency before most countries realized these materials were strategic. Right now, NdPr oxide has been bouncing between $65 and $90 per kilo. Those swings don't happen randomly. They come from three main shocks that every trader needs to track. First, policy shocks, changes in export rules, tariffs, or quotas. One announcement from Beijing or a new U.S. defense procurement rule can send prices moving 10% overnight. Second, supply disruptions, refinery maintenance, environmental inspections, or even weather events that slow shipping lanes. Third, demand surges, EV manufacturers, wind turbine projects, and defense orders pulling forward massive tonnages. If you're only reacting to these events after they hit the headlines, you're already too late. By the time the public market adjusts, the best-priced supply is already spoken for. That's why understanding the global refining map is more important than knowing the mining map. Let's break it down. China, still the giant. They have scale, speed, and the ability to flood or choke the market at will. Southeast Asia, Vietnam, and Malaysia are building capacity fast, offering more flexible compliance frameworks. Australia, rock-solid mining output, but refining bottlenecks mean a lot of concentrate still ships overseas. Africa, high potential, but political instability and infrastructure gaps make deals riskier. North America, developing refining capability, but years away from matching Asia's capacity. Now here's the hidden risk: counterfeit lots and mixed batches. It's not enough to get your tonnage. Without proper verification, your material might fail compliance, get stuck in customs, or be rejected by an end user. Imagine paying 7 figures for a shipment only to find out the assay report doesn't match the cargo. This is why verified supply is more valuable than cheap supply. A cheaper price means nothing if your shipment can't clear a bank's due diligence or an OEM's compliance audit. In this business, the paper is as important as the product. The smart traders in 2025 know 2 rules. Rule 1, lock in multi-stage verification before you talk price. This means lab assays, refinery certificates, and compliance packs are part of the conversation from day 1. Rule 2, use SKR-backed deal structures. If you've never used SKR, safekeeping receipt, in a rare earth deal, you're leaving yourself exposed. When set up correctly, an SKR ties a specific batch of product to a financial instrument, keeping both sides accountable. The buyer's funds are secured, but the seller doesn't get paid until verification milestones are hit. In practice, this can look like 3 payment triggers. The first trigger happens when the SKR is issued, locking in the batch. The second trigger is after independent lab verification and compliance approval. The third trigger is after confirmed delivery and end-use certificates. With this setup, you don't release full payment until the product is proven, documented, and delivered. That structure eliminates most of the fraud risk and compliance headaches. Here's a real-world example. In late 2024, a trader secured neodymium praseodymium oxide at $68 per kilo, while the public market was pushing $92. He didn't win that deal by luck. He already had an SKR framework in place, a trusted refinery partner, and a compliance route that shaved 2 weeks off delivery time. When the opportunity came, he could move instantly, locking in a price well below market. And that's the point. In this market, opportunity doesn't knock twice. You either have the structure ready or you miss the window. So if you want to play rare earth smart in 2025, stop thinking about chasing the lowest headline price. Start thinking about chasing the lowest verification risk. That means building relationships with refineries, securing multi-stage verification, and using SKR integrity to hold deals together. In our member-only breakdown, Rare Earth Deals Done Right, SKR Integrity in 2025, I'll walk you through exactly how we structure these transactions. You'll see the actual SKR clauses we use to lock in supply, the compliance milestones that trigger payments, and the verification steps that keep both sides protected from start to finish. This is the same playbook the top RE traders are using right now, the one that lets them win deals before the market even knows there's an opportunity. It's not in any public report, and you won't find it in an industry white paper. And here's something most traders completely miss: regulatory intelligence. In 2025, compliance isn't static. A shipment that's legal to export today might get blocked next month because of a new environmental rule, export quota, or sanctions update. The traders who win big are tracking this in real time. They have compliance officers or trusted agents in the jurisdictions they operate in, scanning for policy shifts before they're announced to the wider market. That's how they position themselves to buy, ship, and clear cargo while competitors are still trying to figure out what just happened. But knowing about a regulation change isn't enough. You also have to design your contracts around it. That's where deal structuring becomes an art. For example, building in adaptive clauses that allow for alternate shipping routes or swap agreements if the original path gets blocked. It's the difference between salvaging a deal and watching it collapse. We also have to talk about relationship capital. In rare earths, your counterparty network is your most valuable asset. The best SKR terms, the fastest compliance clearances, the priority batches in a tight market, they all come from being known as a reliable repeat buyer or seller who closes cleanly. This is why repeatable, documented processes matter. If every deal you close has the same high-integrity verification steps, the same secure payment flow, and the same compliance rigor, you become the first call when a supplier needs to move product fast or a buyer needs verified stock. In the gated breakdown, I'll show you how to combine SKR integrity, compliance intelligence, and relationship capital into a single operating framework that works every time you run it. This isn't theory. It's the exact process behind multi-million-dollar REE trades happening right now in 2025. So if you're ready to stop chasing scraps and start controlling your own rare earth supply, head to tradeskr.com and watch Rare Earth Deals Done Right, SKR Integrity in 2025. That's where we get into the deal maps, the SKR templates, and the verification triggers the public never sees. This is how you stop playing catch-up and start setting the terms yourself.